Hey guys, hope everyone's doing well tonight. I am currently studying a Cert 4 for mortgage broking and finance, and I thought it'd be just nice if I quickly, threw together a PowerPoint, name it brain dump, and just chat through kind of what I've learned. I guess the pros and cons of being a mortgage broker, and also if you were wanting to contact a mortgage broker yourself for property, what that looks like, the pros and the cons, etc. So let's get into it now. Cool. So, what is a mortgage broker? Um, Long story short, a mortgage broker is pretty much just a middleman between the bank and you looking for a mortgage, right? So you can see here I've written that they are an intermediary who helps borrowers find the best home loan from a variety of lenders. Now, normally this is about 30 plus different banks. You're talking for your first tiers, for example, your Westpac and your Combanks. Second tiers like your Bank of Queensland or maybe a UBank, for example. And then your third tier lenders like Pepper Money and Liberty Financial, which they tend to give or charge high interest rates, but they also can, they have more flexible policies and can kind of provide finance to those who might not qualify for the bigger banks. Now, so they advise borrowers on the suitable loan products based on their financial needs and goals. They need to do that. And they assist with the loan application process and ensure that all the required documents are submitted. Now, this is a big one, and we'll get into this later because a lot of people, especially first home buyers, and also just people in general, don't want to go through the hassle of all this. And you can see here that brokers earn commissions from lenders. And look, I've said that they may charge fees, but this isn't common, and um, it probably shows you that you shouldn't go to that broker, and you should probably look for one that won't charge a fee. But there's reasons for this, which I'll get into later. Yeah, like I mentioned, so mortgage brokers are paid through the commissions of the lender. So it's actually there's no fee to use a mortgage broker, which is a massive plus. There's no fee for the most part. Now, how the commission is broken up is essentially there's a upfront commission. Now I've put here around 0.5% of the loan amount. Now this changes; it could go up a little bit, 0.6%, just depending on the lender. And then there is a trail commission, which is a little bit smaller, but it's paid not just as a once-off, but throughout the entirety of the loan. So, for example, if the loan is 30 years, that 0.15% roundabout will be paid every single year for that mortgage, assuming that they don't refinance or assuming that they don't go to another mortgage broker and um, cut that loan off early. Now, with the upfront commission, there normally is a 1 to 2 year window in which the client needs to stay with the loan. Otherwise, if they leave early, then that upfront commission they have what's called a clawback clause, and essentially they have to pay that money back. So, if you are looking to refinance, best thing to do would be to go back to the original broker that provided you that loan to begin with. And then I've just said the commission structures can vary, which is true. I've just given some averages here of 0.5%, 0.15% for the trial commission. Now, should you use a mortgage broker? So what I've learnt is, look, if you were to go to one bank yourself and ask for the range of their mortgage options, you'd probably get, let's just say, a couple different options. But in the same time it takes you to do that, if you can go to a mortgage broker, they can normally check across 30 plus lenders, sometimes a little bit more, sometimes a little bit less. But I mean, ultimately, you're getting much more options with doing the same amount of work, and actually less because they do a lot of that for you, the mortgage broker. So it saves you a lot of time. I also, I mean, it's true that they are experts in what they do. That this is their job, and ultimately they're processing a high amount of loans with lots of different lenders. So they're going to be on, I guess, preferred terms with all these different lenders, which means you walking in off the street with no relationship versus a mortgage broker doing the same, they're likely to get a better deal than what you could yourself, for the most part. Um, I've also said here that they can navigate complex situations such as refinancing or securing a loan with less than perfect credit history, which is true. Even checking things like postcodes before buying. Now, I heard this story that some first home buyers were really keen on a house and certain postcode, and then once they got to the end of the process, they found out that the bank doesn't actually service that postcode. So it was a massive waste of time. Now, could that have been avoided with a good mortgage broker doing checks from the start? Probably yes. So little things like that, especially if you're not used to the property buying, I guess, system. Um, this could come in handy. They can also guide you, ensuring your loan matches your financial goals and situation. I mean, when brokers actually put together your options, they have to actually ensure that they meet exactly what your objectives are and what you're wanting. They won't just give you options that don't align with your situation and what you're wanting to achieve. And look, I've said here at the end that there may be cases when going to a bank directly is better. Now, look, this might be in tricky cases where you've tried, say, five different mortgage brokers because your situation is quite complex. Maybe you have lots of properties, or maybe you're looking to, or maybe you have a certain type of property, and mortgage brokers are just that's just not something that they want to deal with. Sometimes it's better to just go to a bank, and they might be able to give you options that sometimes a mortgage broker might not be able to access. You can actually see on, for example, Combank's website, there are options that are only available going direct to them and not through a mortgage broker. So keep that in mind. Now, yeah, I guess as part of my studies to become a mortgage broker, or at least look into it, I guess the question comes up, should you become a mortgage broker, or would you want to become a mortgage broker? Now, I think the biggest thing here is that because you're not on a base salary as such, it's via commissions. The upside is very high, but also the, I guess, security of having that regular income isn't there. So I think if you're in the position that you've already built up a nest egg, or you're comfortable with not having that regular, consistent income, then potentially this could be a good option for you because the commissions can be quite lucrative. For example, 0.5% on a $1 million home, that's about $5,000. And then you also get your trailing commission on top each year. So the life of that loan could be, well into the five digits. I think as well, it's nice to be able to help people achieve their home ownership goals, especially with the cost of living crisis and people not knowing what to do, and there's too much information, or it's too confusing. I think being able to just make it super easy for someone, and make it so that they're able to achieve something that maybe they couldn't have done without you, I think is really good. I've said here the role requires a deep understanding and interest in mortgage and loans. I think if you're someone who personally invests in property yourself, and you're actually interested in the process and kind of getting the best outcome for the client, I think this will be really good for you. And obviously, you need to be interested in kind of keeping up to date with what's happening in the world of lending and mortgages. Not only you know just so you can keep up to date, but also there's 20 hours required each year that you have to undertake some professional development, make sure you're up to speed on everything. I've said here that you also require a Cert 4 in finance and mortgage broking, which is what I'm doing currently. I'm also doing a diploma just bundled with that because that was better value, but that's not required. There's also a requirement to be a membership with some key associations. For example, one that comes to mind is, I think, MFAA or FBAA, I believe. Just double check that. And then you can either become a franchisee from a big mortgage company, or you can become a authorized credit representative of a aggregator. Um, for example, AFG, I believe it is, Australian Financial Group. They are a popular aggregator that provide I guess that middleman relationship between you and the lenders, so that you're able to kind of get access to that panel and then be able to provide those loan options to your clients if you were to run your own business. And to sum it up, I think it could be very rewarding for someone with lots of sales, communication, negotiation skills. Definitely, client facing, people facing. So, being able to deal well with people and be able to um, match their goals with a mortgage product. I think if you're able to do that and you're happy doing that day in day out, then I think this could be a really good role for you. So anyway, that's everything. Long story short, that I know or have learnt about being a mortgage broker. TBC as to whether this is even an option, but I'm currently studying it. I personally enjoy real estate quite a bit, so that's why I'm studying it. And yeah, it's been great learning about it. But yeah, if you have any questions, let me know. And otherwise, I'll see you in the next one. Peace.